All right, test 1 2 3, test 1 2 3. Hey everyone, hope you guys are all having a very good morning here. I am up a little bit early for myself. Loki says hello. Loki, where's Loki at? Oh, look at you being a good boy. He's having a good day here today as well. And this time I know my audio is working today. Yeah, he's just kind of excited and happy. He hasn't had a good chance to play outside today, so he's going to be a little bit antsy, but after the stream is over in a few hours, we'll be outside for maybe a couple hours, just chilling, relaxed. Maybe I'll smoke a cigar or something like that. So, hope you guys are all having a good day. Hey GT, hey the Dolphin, happy to see you guys here. Let's see right here. And hey GT, yeah, he also has a very good green screen setup, I would say as well. Especially when it comes to just so you know the repetitive stuff. It's almost like what's the other guy that also has a lot of views? Jordan Cameron. Jordan Cameron also has some. But I would say Crypto Lifer is a little bit, I don't know if I would say trading focused because they both do trading. But I think Crypto Lifer has more of an aura about him as far as how he navigates. Because I see, what do you call, Crypto Lifer at a lot of these expos and stuff. And I haven't met Jordan Cameron just yet. Hopefully I'll meet him at maybe next year's Bitcoin conference or something around cryptocurrency, right? And hey, Everlasting Bliss, happy to see you. 1831 Netherlands. Oh my gosh, that is a little bit late. Not too late though, but late enough. Hey, Low Boy, happy to see you. R Lake, happy to see you as well. I used to call you Blake before I could really see what was going on my monitors here. There we go. And hey, Richard, happy to see you too. Happy to see you again, dude. It's been a while here. Besides yesterday, I'm just like try to get back into it. All of my stuff is completely different. So I was just getting set up here a few minutes ago for all this stuff going on. And, you know, if we go over here very fast, I'm still trying to get the YouTube stream to work out where it doesn't have this letters. Everything was set up perfectly, but when I turned off my computer, you know how everything kind of gets reset with your software. So I'm trying to figure out exactly how I had all of this laid out. And I think it'll be fine for now. But I definitely got to figure out how I had this before here. Because if I pull this over here so you guys can see what's going on, there should be a few Jerome Powell speeches coming up. So that was 16 minutes ago. Isn't it crazy how, you know, most of us on the West Coast are just waking up, going to work, and yet the Senate is already, you know, in the middle of hearings and stuff. Here we go. CBS News, Federal Reserve Chair Powell discuss interest rate decision. We're going to use this one here, and I think that'll work out fine. So let me go back over here to this one. Yeah, and that'll do the trick for now, I think. What I'm going to do, though, is actually just shrink this down a tad. Let me actually, instead of doing that way, let's do it this way. There we go. And then we're going to just move this out a little bit to the side here. And there's going to be part of it cropped off, but I think we will survive this. Let me see. There you go. Well, that doesn't look the same. Okay. So I can't do it that way. Okay, here we go. All these little loopholes I got to do to make sure everything looks pretty nice. I would say good enough here. It's not going to be precise because I got to take some time to do that myself, but it will be good enough. And then let's shrink this down from the top a little bit. That'll work, right? That'll work. That way we can see his lovely face close up. Now what I got to do is actually hide this tab. Show you this tab. Make sure this is the right tab. This is not the right tab. See, I had a system. Being off your game or being, you know, having to go somewhere else for a little bit, it messes up your system here. So let's go over here. There we go. That's the one. Except for my numbers are now very, very small. Let's go from 10 to, let's say, 28. That way you guys can see a little bit more about what's going on. And there we go. All right. So if you guys recall, last night we were talking about how it's probably not going to be the best time to be doing a lot of day trading, maybe scalping, but we talked about the market kind of going sideways here. And if we kind of look to see what happened over the last, 10 hours, basically we just went sideways here. Nothing crazy happened. Nothing exciting happened. However, we are looking to try to have that bounce. Now, we talked about, I think it was last night, two things. We're trying to hold on to this 20-week moving average here. Benjamin Cohen on his channel, he was talking about his bull market support bands, that type of stuff. We're trying to hold on to that level right now. despite a lot of the, the oscillators being very bearish here. Daily, we're kind of in a mixed range where we have bearish, bullish, but like barely bullish here. So the overall weight is definitely pulling us down right now. The one thing that we have going for us, I would say, is really two things. We have that 20-week moving average, we have that 20-day moving average, and then of course, now we have FOMC that can really give us a pop, and maybe that can make the market get back on track. At this point in time, again, I'm cautiously optimistic that something today could really get Bitcoin going. And that's why I'm not all saying, hey, sell everything you got. We're going down to like 50,000, 60,000, like that, I'm really just trying to take this easy today because based off of what Jerome Powell says here, we are going to know pretty quickly whether or not we're going to be looking really good for the next few weeks, or if we still have to go back into this longer consolidation where possibly we end up coming all the way back down here towards like 63,000, 61,000, then making another larger move up here. You can almost think of that as just, we've made a high, we're going to make a higher low, and then go higher. We'll have to wait and see if that really comes to fruition, or if we really are just going to have a big attack at this level of resistance and then trying to break out and just start going up for pretty much the beginning of August here. I know it's the end of July, but tomorrow is August 1st. We should see a lot of things gearing up here, and hopefully that is good for us. Still remains to be seen, but I'm still cautiously optimistic here just because we had decent inflation, right? I still believe we're going to be okay here as far as what happens over this year. Nothing has really changed my mind on that. It's just the process in which we get to these great levels of, $100,000 plus. Oh boy, it's just been one of those cycles where it hasn't been like any other cycle. And, we're still taking our baby steps. This has been a long consolidation. I'm hoping just like this was a long consolidation, once we break out, things typically start to go a lot faster, and we'll be rewarded for having to wait so long for this breakout, which I think is going to come. Timing-wise, if you're trying to be like, I'd probably say fall, but I'm thinking with FOMC, we could really try to have a big unorganic pop, and by that I just mean the chart would look really freaky, but we could do it. Like, you see how we kind of geared up for this move, boom, we went fine. This one we kind of geared up for it a little bit right here. After some craziness with the ETFs, this time it looks kind of funky, but maybe we can get it to work in our favor. Could almost be like the old days here when we kind of just were doing some wild stuff and we just said boom, But even there, consolidation, breakout, change of characters, This time everything is very, very, very wonky, and we're just going to have to accept that. Now, as far as Bitcoin's concerned, we know that it's kind of a little bit more bearish here. We'll see what happens with the FOMC data, but Ethereum, getting squeezed right now between the 200, the 50, and the 20. I'm actually thinking that we might see Ethereum try to come back up here to maybe $3,500. I'm hoping for something like that later on this week. Solana here, broken out, still moving up okay. Had a little bit of a dip over the last few days, just like everything else. The oscillators don't make me very excited about this, and primarily that's because when I see a breakout on the weekly chart, I definitely want to see everything flowing together, and the MACD kind of has me spooked just a little bit, where I'm not just going gung-ho swing trading this sucker like I would normally do during a breakout of this magnitude, right? We've been consolidating for months here. Things like Dogecoin still consolidating, chilling out, not doing anything too crazy. You can see how the MACD and everything's still fairly bearish, and you can see when Dogecoin had its breakout here, right? Small breakout, but a breakout. You can see how it wasn't able to hold on to that. That's kind of the vibe I'm getting from Solana right now. However, Solana broke out a little bit later on, so there's a chance for it to actually move up with the FOMC data. With over here, again, getting pulled back, it looks a little bit different here. Generally speaking, we do have that change of character. It's kind of resting at that level of support. We'll see if it's able to kind of hold, then rip up down the road here. I'm not going to go over too many tokens here unless you guys want me to talk about something in particular. XRP's been making a move the last few weeks. It is currently at a level of resistance. Trade responsibly with this one. This is something where I just typically hold spot. I don't usually go long on this too much with leverage. However, it has been having some good moves. Everything here is bullish on the weekly chart. Everything here is bullish on the daily chart. A little bit kind of wonky with the stochastic, but we're there. And you can see right now we're breaking out, break a structure. You might see a push up here towards 72, 73 cents, which would be pretty big if you ask me. So again, I think I like where we're at. We just really need that FOMC meeting to get us going a little bit aggressively. For those of you guys who like MOG, that thing is still booming up here quite a bit. COSPA is still doing fairly well right now. COSPA might be the one to play actually at this point in time. And then where was the other one that we were talking about here? Oh, here we go. Fetch AI, you know, that new AI thing. Let's see. This one is a little bit different. So you're seeing AI tokens trying to hold the line here. Not as optimistic as other tokens out there. NMR trying to hold the line. That's Pendle. Pendle trying to hold on dearly. So you're kind of seeing this weird thing play out where maybe meme coins are looking pretty good, a few other tokens outside of that looking pretty good, and maybe just the big market caps looking okay. So, you know, just be careful out there. Not everything is most likely going to be moving at once here. You might see a potential breakout with Bitcoin leading to phases. And by that, I mean, you know, Bitcoin takes off first, Solana, Ethereum with it. Then you have a few other tokens like maybe a MOG, a Dogecoin, meme coins take off. And then at the end, you might have some of the other tokens taking off like AI tokens or some of the OGs, like, you know, like, you know, I don't know, Shiba Inu, ADA, Ape Token, Arbitrum, stuff like that, okay? So keep an eye on those. I think we're okay for now, but again, we're just waiting to see if we can learn anything about when this might go from 5.5 to 5.25. That's what today is all about. There's a news article right here talking about everything we need to know about the Fed, but I see there's some breaking news here, so let me talk about this very fast. Biggest moves midday. Oh yeah, it's 9 o'clock. Jeez. My whole time is so messed up from just being over there for a week. Stocks making the biggest moves midday: Boeing, Vistra, Match Group, and more. So Pinterest shares tumbled 12%. Ouch. Vistera soared 14%. That's good. Texas-based power company. Match Group, dating app owner, moved 13% higher after the company posted second quarter revenue. People are going back to Tinder. That's interesting. AMD shares gained more than 4% following the chip maker's earnings and revenue beat. That's good for them. Arista Networks popped 9%. Skyworks plunged 6%. Upstart rallied 10%. Anything else here? Humana down 9%. Starbucks rose 4%. AutoNation popped 8%. We're looking okay here. Marriott went down 5%. That means travel might be going down here fairly soon. Bunge moved up. Constellation Energy rose 11%. Boeing went up 8% or 3%. There we go. Oh, they got a new CEO. That's okay. Okay. Yeah, you know, one little fun thing. Those astronauts that Boeing sent up to space, they're still stranded up there. Boeing said they're not stranded. NASA said they're not stranded. The government said they're not stranded. They are freaking stranded up there. And like nobody's really talking about it too much. People should be talking about that. Like they're stuck and nobody seems to care. Really. I mean, I know they have food and stuff like that, but like imagine being told you're supposed to go up there for just like a couple days and you're stuck up there like 60 days later. It's kind of crazy. Kind of like, you know, like it's very surprising that nobody's really covering that as much as I think they should. But okay, let's hop over here to the 15-minute chart. Let's take down the stochastic. And you guys can admire how sideways Bitcoin's been, pretty much not doing anything over the last few hours. But we're looking kind of close to having a golden cross between the 15-minute charts. That could be interesting. Pretty much, though, we're just looking at a bunch of volatility. In about an hour and 15 minutes, Jerome Powell will kind of say, give us the news or the word about the rate cuts, increases, all that type of stuff. I am so tired. I don't know how to speak properly today. Okay, guys. I'm going to slow down my brain for just a second. In 1 hour and 15 minutes, Jerome Powell is going to give his statement out to everybody, and everybody's going to have a chance to read it and see what he says. At this point in time, we are not expecting a rate cut or a rate increase. We're going to most likely see that everything is going the same. Now, a half an hour after that, around 11:30 Pacific time here, you are going to see Jerome Powell come out. He's going to do the press conference as always, and we are going to hear what he has to say. If you guys want to see Bitcoin come up, of course, we want to see him give a fairly dovish speech where he's talking about, hey, things are looking fairly good as far as inflation. We think we can do one rate cut this year, maybe two. He's not going to say the maybe 2 point, but we can hope. And then what that should be able to do here is get the dollar index to continue moving down after this breakout. Back over here, when we started to break out around July 11th, Bitcoin didn't really do too much here, but you can see there was some action, right? So June 11th, right here, Bitcoin broke down. The dollar index broke down, and then you started to see a little bit of a rally with Bitcoin here. It wasn't anything historic, but it was enough to get people to be interested in seeing what's going on here. Again, the 11th is when he broke down. We continued to fall down afterwards. Afterwards, around the 18th, we kind of had this big pop back up. You go back over here, the 18th right here, we still managed to rally up a little bit more after that stop happened. So there is still some momentum on our side. It's not a lot because that weekly chart is still pulling us down. But the goal here today, if we're really lucky, we might be able to see the dollar index actually start coming back down to retest this 103.65 level. And then potentially by the end of next week, we're all the way back down here below 103, maybe more realistically, the low 103 range. I think that's kind of where we're looking for right now. Oof. Concentrating like that hurts my head immensely. I don't like it. There we go. Back to the 15. A lot of stuff to cover here today, though, so hopefully things will turn out better. Now, I'm just going to read the key points from this because I think that's the best part about the CNBC articles. All of this stuff typically is a lot of fluff here, but the key points just kind of give you guys an idea of what's being talked about. So the key points for CNBC are, if things go according to expectations, the Fed again will keep short interest rates on hold roughly from where they've been for the past year. There are expectations that the Federal Open Market Committee will drop signals that as long as there are no major data hiccups, a September move is very much on the table. The central bank has been holding its benchmark funds rate in a range of 5.25% to 5.5% for the past year. Kind of a recap of what we've been talking about here, but again, it's one of those big moments where we're really hoping some good can come out of this, and everybody should be kind of excited, kind of glued to the screen here because we're just basically waiting for a big event. Hey Harris, good morning here. Edwards, good morning from South Florida. Romania, oh Jesus, dude, happy to see you here. I always like having the global audience. Let's see, AVAX is the same thing. Oh, probably. Well, actually depends on what technicals we were talking about before. If this guy gives a rate cut today, the market will implode. Oh geez, yeah, that would it would lead to a lot of chaos because nobody's priced it in. So basically, if he were to do a rate cut today, Bitcoin might do something different than the stock market. What I would think would happen is we would actually have an initial spike, and then that might be followed with maybe a little bit of a weekly downtrend here. Because if you go look at the major indexes at this point in time, we're kind of in a weird spot. So Dow Jones, this has kind of been lagging across the whole market, but you saw there was a buying opportunity here just last week. Right here, buy after the break of structure. All the oscillators are green. You could buy right here, and you could be, basically swing trading this move at this point in time. That's looking good. The NASDAQ, however, you see how volatile that is, and kind of how crazy that is. This isn't really the time to be buying this generally for me, unless you're thinking of something very long-term here. But again, I'm on a different space right now when it comes to stocks. I'm actively scaling out of a lot of my assets in the markets. I've allocated a little bit back into some of the small caps since they broke out. I'm hoping they continue to do well. We'll talk about those in a second. But generally speaking, the NVIDIAs, the AMDs, the Netflixes, all that type of stuff, I'm typically pulling money out. You guys know I typically have a lot of money invested in oil. Right now, of course, because my PXD shares got bought out by Exxon, I've just been moving those shares over to Exxon. But generally speaking, I'm pulling money out of the stock market. I'm not putting money into it. I'm kind of waiting for something of a larger correction. We already kind of have one right now. If you kind of look from the bottom to right here, we're down 10%. I would probably like to see us actually come down, break down, and kind of go sideways for a little bit, and then I might try to accumulate some positions. But right now, as I look at the market, I'm just like, I don't know how fast or how long we can just do these parabolic things, especially once rates, we're kind of like shifting into a new phase, right? This was rate increases. This was like free money. Over here, we've kind of had this weird system where, how would I even want to explain this? Like, the economy is overheating. Everything costs more, but people still had the savings from COVID, so they were spending all that money going crazy. And that's kind of where we are right now. There's been a little bit of pain, but typically we've had what you might call the AI boom, and that's kept the rally going on for quite a bit of time because those companies have had to increase their spending, their OPEX, basically operating expenses, drastically to keep up, and you've seen a lot of companies benefit from that. The poster child, of course, being NVIDIA. Okay, but you have NASDAQ right here, a little bit different, and you have the SPY right here, a little bit different. I have to say, this was great. These don't always work out exactly how you might think, but so far, the general areas have been working out pretty well. Same thing happened right here. You saw we got rejected right here for a little bit, then we broke out, then came back down. Always going to be some type of craziness, but if you wait for those green signals where everything is telling you to buy down here with the green right there, it's typically been doing just fine. I might even show you guys this right here. Yeah, we've been in a very good rally here for a while, even on the daily charts, right? Now, this is a bullish rally, so you're not going to be shorting into this too much. But if you just buy when it's green and you hold for the swing trades, you're typically looking at some great opportunities for some wealth. That being said here, let's go over to the last one. Russell, this recently had a breakout. Right there, I started to buy some up. I don't put a lot of money into these, honestly, because these are kind of more of the smaller caps. They typically are a little bit more risky. You can think of these almost being like cryptocurrencies, but you don't have the pleasure of being able to trade these 24/7. So if something bad happens, something bad happens. But again, everything is green over here. We have a breakout. Things fairly are looking good. The NASDAQ tech, that's kind of spooking people at this point in time. And I feel like people are rotating out of tech just like myself and maybe putting that money into other spots. We see oil consolidating here. That's doing fine. I'll probably make another video for you guys fairly soon talking about the best ETFs to buy during this time. And they're probably going to be more general, but they're going to be like dividend plays for you guys if you guys want to do that type of stuff. There we go. But I need to start talking with my editor now that I'm back home and back from Nashville. Oh, what's right here? AVEX is the same thing. If this guy, oh yeah. What do you think about the chain link? How does that look? Chain link? Let me see if I can actually have them. Well, let me just search for it here. Let's see. Bearish. Just tell you on the 15-minute chart right now, bearish. All right, there we go. Yeah, it looks like it wants to retest some of these lows around 1263. Let's go to the weekly chart here. Yeah, the weekly chart still looks pretty bearish here. Now, it doesn't look like it's going to go into a complete free fall where it comes all the way back down to like $7 or anything like that. But you can basically see this kind of squeeze happening here, right? So until it breaks out, this is probably going to be just kind of a hold and wait and see type of play. Over here on the daily chart, let's push this down a little bit more. You're almost looking at a potential breakdown here, actually. Yeah, so get ready for this to possibly come back down here to the mid-12s. So 1250, 1240. We'll see what happens after that. I wouldn't pay too much attention to it literally right now because, again, the FOMC decision is going to make this thing break, try to hold or bounce. Right now, it's obviously not bouncing, but I don't think this is exactly the right spot for it. Let's go over here very fast. And there we go. Midpoint right there. There you go. So we'll have an idea if it's going to bounce off of this or not. But right now it looks bearish as far as the next few hours, next few days. Definitely bearish here. Again, hope FOMC meeting can give you some good bounces here. Sorry. Always making sure I'm not running over my dog's tail. Alrighty, let's go back over here to the daily chart. Definitely bearish. If you want to be more optimistic, you're going to have to wait for some type of breakout. Typically, if you're not waiting for a breakout, you could just possibly wait for this to consolidate a little bit longer. It feels like this still has a few more weeks before things really start to get good for it. You can see where things are going to get lively. It's going to start going back up to $27. You can see it, but we're kind of just not even close to that juiciness. So if you're looking for something of a longer term play, this is just an opportunity where you can get some good discounts for dollar cost averaging. And hey, Bliss Showtime, happy to see you as well. What's right here? How long for the meeting? The meeting starts off in about an hour and a half. We will get the rate announcement in about an hour here. Hour and 5 minutes, it looks like. Yeah, hour and 4 minutes. If the rates weren't changed in February and we pumped, why do you think Wall Street will keep the price low until Powell decided to start cutting? Let me reread that very fast. If the rates weren't changed in February and we pumped, why do you think Wall Street kept the price low until Powell decided to start cutting? I don't think it was so much Wall Street here. I think everybody as a whole is pretty much just waiting for this signal to allocate more money. One of the weird things that we saw happen back during COVID was the government, whether it was Trump or Biden, they really just printed a shit ton of money. And that kind of fucked with the system a little bit. But that money is in the system. Now, the money really didn't go too much to the average consumer, like, me and you. If you make like under $400,000 a year, you didn't feel so much of that benefit. But if you're a millionaire or billionaire, you saw your net worth go up a lot. All of that money went towards corporations. This is a Trump thing and a Biden thing. They both like to give money to corporations because they both have this idea of the trickle-down economic theory, right? Which is fine. I'm not going to bad-mouth them or anything like that. It has its uses and it has its downsides. However, that a lot of that money has been used and funneled into interest. Think of T-bills, notes, things of that nature, where you just get 5% down on your money. A lot of that money is sitting over there. Once we have rate cuts coming down, we have rate cuts and the interest rate comes down, that money is not going to be as excited to stay in those places because the return on those investments is not going to be as good. So they're going to start moving this money over to different parts of the stock market and hopefully the crypto market here. Crypto is always a little bit more different to me because people do move their money all over the place, but you can buy a Bitcoin anywhere and it's generally going to be the same thing, same place. But yeah, so I'm hoping that things will speed up here a little bit more. The way the government has been signaling here, or the Fed, is that they're hoping for one rate cut. Everybody's been talking about one rate cut for the year. I'm hoping we can have 2 rate cuts here, and then that may speed things up a little bit more. My big fear here, and this is where the stock market comes into play, is that we're already starting to see a slowdown. Will the slowdown accelerate, or will it continue to go gradually down? I feel like, the American economy is such a juggernaut that it takes a while for it to shift. Right now, it took a couple years, but now we're going down from going just like straight up, right? Going down. It's not crazy. We're just going down. Afterwards, rate cuts are just supposed to stop us from going down too fast. We're still supposed to be going down here. We'll have to see if that does have the effect, though. Got a message. No, it's not important. Okay. All right. By the words, yeah, chain link bearish right now, and you can actually see that right here on the 15. It's going down more. Yeah, it's trying to test out the support level right here. There we are. Back to good old Bitcoin. Oh, oil's launching up today. Wow. Oh, that could cause some issues. So if you guys didn't know, oil is actually up like 3.5% today. That typically isn't going to be a huge deal, but this could be something of a trend changer. And that's because if you go over to X, you're going to see that Israel assassinated some dude. Social Security, Megan, hose for Harris. Jesus. I left Twitter for one day and things are talking about hose for Harris. Seniors. No. Some dude was assassinated in Iran, and I don't know why it's not showing up here. Is it live? No. Who got killed? Here, I'm just gonna go over here and search for Iran. Not Iran. Google, stop playing games. Iran. There we go. This dude. Hamas political leader Ismail Heineken, I don't know how to pronounce that last name, got killed. All right. So I'm pretty sure we all think it was like Israel at this point. Cool. It's a war. They're attacking each other. It's all part of that process here. Basically, this is going to cause some angst and anxiety about what's going on in the Middle East. And when you have that anxiety, oil typically decides to spike, right? And you're seeing this right now. Boom, news came out, came back down, regulated, and we've been going up here for a hot minute here. So get ready for that. If you guys are like me and you guys like my oil stocks that I've been picking for the last couple years, I don't know how they're actually doing here off of this news. Tesla's up a little bit today. GameStop's up. Where is Exxon? There it is. You know, we're still looking fairly good. In fact, we may see Exxon hit another batch of all-time highs. For as anti-oil as the government is, oil companies are surprisingly just making a shit ton of money here, which is kind of crazy if you think about it. I was kind of worried holding my oil stocks for as long as I did because of Joe Biden being more of the Green New Deal and stuff like that. I don't think the Green New Deal has as much teeth as people thought. Otherwise, oil companies would actually be feeling some like financial pain. I don't really think they did much to stop anything, or maybe the investments are just taking so long to have their intended effect. But yeah, we're definitely seeing. It could have been because of the oil shortage we had a while ago, where the prices of gas went up to like over $5 here in Seattle, and everybody was just pissed off, and they had to like do the strategic petroleum reserves and stuff. But yeah, ouch, rough, rough for that. There we go, back over to the 15 here. Watching Bitcoin trying to make a move. Let's go to the hourly chart so you can actually see what's going on though. The 15-minute is so boring here. What's right here? And hey, it's Remy, no limit, no rate cuts today. No. I don't think anybody's expecting a rate cut today. No rate cuts, no rate increases. We're supposed to do nothing. Just say, hey, we're going in the right direction. We're looking for a cut in September. Cool. Everybody good? Bye-bye. That's basically what Jerome Powell is about to say today. With AI-related companies having come down lately, should one stay away from AI crypto? I wouldn't necessarily say that just because of how Bitcoin kind of works and how a lot of the tokens kind of follow it. But I would say AI is not done. I think you may have more buying potential for some of those AI tokens. The key for me, though, is because of how volatile everything is in this space. You don't have to dollar cost average. You don't have to try to buy the bottom of an AI token. What I would typically do here, if I am a little bit more skeptical, which you might be, of course, of AI tokens, is you might just come down here and start looking at a couple of like world token, right? Very, very, very bearish here. Everything about this is bearish, bearish, bearish. Now, if you just want to give this a few more weeks, you can wait to see if we turn bullish on the stochastic, the RSI, and the MACD, and then possibly we have some type of breakout happening too. So if I put this trend line on top of here very fast, you can see we're not even close to that breakout. But if we stay sideways here for maybe about another month and a half or something like that, we have a breakout. By that time, those oscillators should be looking pretty good here. So if you pull that down here, that would be bullish. We're bearish now. This is about to be bullish, but we're bearish right now. And this is bearish, and that might be bullish coming over here. And that could be a huge rally that takes you all the way back up to like $12, $14 over a period of a few months. So there is a way to play these, but typically you don't have to be buying a lot right now if you guys don't want to. You could pretty much just wait for that signal that says buy, and you're probably going to be happy with that as well. The only real difference in the way I trade versus a lot of other people when it comes to like buying the bottom and stuff, the person that buys the bottom, they may get like 500% back for their investment. I may only get like 350% back. But when I'm trading, I'm not really stressed about it. So, I guess the easiest one to show you here is Bitcoin, because this is the one we always talk about here. But typically speaking, if you buy a breakout where like change a character right here, where everything was green, or a breakout here by the Fibonacci's where everything is green, typically, maybe you didn't buy right here, maybe you just buy right there. Typically, it works out just fine. Again, we have a breakout right there, green, 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 everything's fine. You're good, But you're not making as much money as if you bought over here, held, and then watched it rally all the way up here. Same thing. You're not making as much money as you did over here if you would have just buy over here. So what I do is I do both. I dollar cost average, and then when we break out, I open up swing trades. It's nice. You get a little bit of both worlds. The issue with dollar cost averaging, of course, is it can keep going down. It can be very, very boring. Most people lose interest in cryptocurrencies if Bitcoin's not just going straight up. We've seen this a lot this cycle because, of course, we've had these multi-month little consolidations here, and it's just been freaking abysmal because we've been in this high interest rate environment. Again, go past 10 years, you know. During the 2021 rally, interest rates were at 0, you know. 2017, 2018, interest rates were at 2%. There wasn't really much going on here. Like when Bitcoin first started to take off way back over here. Let's go to the Coinbase one. There we go. Right? Back whenever I first started really talking about it, CNBC was talking about it, you know, Fox Business, yada, yada, yada. When this thing really took off, it was back over here in 2015, right? See the breakouts and start to go back up here. So 2015, nothing was happening at the beginning. Now, as rates went up in 2017, you can see right here, 2016, 2017, right? We had some hiccups, but we generally kept on going back up. 2018 is when things started to get a little bit crazy. But I mean, by that point, look at the chart. Where we are right here, right? And 2018 is actually when we broke above 2%. So again, we don't like being in a high interest rate environment as far as cryptocurrency. We just don't like it typically. When this goes back to normal, I think we can expect some really good moves. It's just we're not expected to go back down to 0.25 to 0.0 to 0.25. We're not expecting that anymore. We're expecting to come back down to maybe 3%, maybe if we're lucky, maybe 4% if we're lucky. The government, they're terrified of inflation coming back because, again, they messed it up so much in 2021 and 2022, printing all that money from the government side, and then the Fed was like, this is fine, it's just transitory, these have long-term effects that can really fuck with the system here, and we're being fucked by this sideways action with Bitcoin, if you guys hadn't noticed. And our money is valued very much so. Get ready to be rich, guys. We're pumping the rest of the year. Jerome Powell is under a lot of pressure, plus it's election year and the economy has to do good. You know what? I don't know. I really don't know. This election season has been just the craziest thing I've ever seen. Like, the way the establishment kicked Biden out was absolutely insane. You guys know I'm usually pretty skeptical of politicians in general, but like, my conspiracy alarms went like freaking crazy. Like, you know, you kick out the president from running again, you install his VP as that person with no voting, no election type stuff, and then all of a sudden the media gets all happy and excited, like just like that. I mean, it freaks me out too much. And I don't think it's like one person controlling everything. I just think it's a bunch of rich people that have common values, and they all kind of understand how the way the game is played, and they kind of move the pieces accordingly. But yeah, I don't know. I'm just so skeptical of this whole election this year. I am just like, I don't know. It's gonna be weird. It's gonna be fraught with a bunch of shit, and people are gonna be ticked off one way or the other. If Trump wins, you're gonna see a lot of probably rioting and stuff. If Harris wins, you're probably just gonna see maybe some rioting. I'm not entirely sure, but it's gonna be crazy either way. So, here we are. Let's see how this election cycle goes. Jerome Powell, again, if he does his first rate cut in September, that's a couple months before the election. That doesn't do anything. Right. So if he really wanted to help out Biden, he would start now, this month, or in August. And I don't know if he has the cojones to do that because he knows that everybody is watching him right now. I don't know if he has the cojones to do something of that magnitude here. I mean, Kuwait has a lot of oil wells. They sure do. Is it the food industry? Wendy's charging $6 for chicken biggie bag now? I don't even know what the chicken biggie bag is. But yeah, inflation sucks. And I think people think about prices going up, but right now what we're experiencing, because people can't afford to see the prices go up anymore, and the companies have realized that, what they've moved over into at this point in time has been shrinkflation. So you see a lot of stuff is getting smaller. Look online, search, Google shrinkflation. You're going to see a whole bunch of stuff there. No bueno, no good. My Mexican street tacos aren't even as big as they used to be. So it's a shame. We will survive this, but I mean, I don't expect the government to fix any of these problems here. I think the one thing that you guys just have to do is make proper investments and find ways to make more revenue, hopefully in a way that doesn't require so much more of your time. I don't see this getting better anytime soon. I think real wages should grow over inflation eventually. But I can't see anybody fixing the monetary disaster, which, is our policies. I don't see Trump fixing it, and I don't see Harris fixing it. I guess Trump might be a little bit better because maybe, but like I don't know. Honestly, they both are spending a bunch of money here, so we'll see. We'll wait. We'll have some fun watching the world burn. Right now everybody's just watching the Middle East because that leader got killed. So we're like, is it going to be another fire over there? What's going on? We pretty much got bored with the Ukraine war. I don't know what the heck's going on over there, but the world's in a weird spot, guys. We just have to accept that going forward. I'm just mad it went to $1 extra when it's been $5 for so long. I don't know. My favorite steakhouse, I used to be able to get a steak and lobster for about $100. Now it's $185. It is what it is. I went over to that steakhouse in Nashville, some Jeff Rudy's or something like that. I got a steak, a couple beers. I think a sushi, like about 4 pieces of sushi or the fish, and then a sparkling water, and it was like $280 or something. Oh, and I got a couple old fashions. So yeah, things are just more expensive nowadays, and I feel like $100,000 when you were growing up, it does not mean the same thing nowadays. I feel like $100,000 is like low middle class at this point because of how crazy the system is. We must have a rich Christmas this year. Hey, I expect Bitcoin to be doing great in the fall, but right now we're just kind of waiting for that setup here. I mean, like the way you can think about this in a few different ways here is right now, of course, Bitcoin is going sideways here. We're hoping for a breakout. We're hoping for something to go a little bit better. But if we manage to break out sometime in August or September, we could really start going up here to end the summer. We can consolidate for a little bit through the fall. And then possibly if the winter is better than the fall, we may even see us having a winter breakout that takes us all the way back up here to like the 150s or so. I still think I'm going to be scaling out of a lot of my longer term assets once we get up to $104,000. That's personal for me. Altcoins, I'll be more subjective. I won't just sell them willy-nilly. I'll really be waiting to see if we have altcoin season or when this altcoin season takes place. Because right now Bitcoin has really been a big earner for me this cycle, where altcoins, as far as those long-term holdings, really haven't netted me the gains I was hoping for. You can talk to any influencer out there. Meme coins have been very generous to me, let's say that. But besides really meme coins, the things that I thought were going to do great, they really didn't do great. Ethereum over here, it's been good, but, it feels like we're not done with the rally yet so far. Solana, good, but, it's not where it was back over here to make it all new all-time highs. Shiba's good to me for a minute. Then, of course, I sold like I typically do with Shiba Inu. Arbitrum, not really hitting it. AXS, not really hitting it for me so far, right? BNB, this has been good so far. I have to say, very, very good. Volatile, but good. XRP, it's XRP. Bitcoin Cash, Chili's, AVAX, Compound. Some are okay, but they just, it feels like we're still more mid-cycle. Look at DOT. Look at DOT right now. DOT is back to where it was back over here in November of last year, back to where it was in November of 2022. It's, back to where it was back over here in 2020. Back over here, 2020. There's a lot of stuff that just is not doing so hot right now. EOS, Matic. Matic's been interesting, but ever since that breakdown, we've been waiting to see if we can find some support, and we're just not doing a good job of that right now. Ethereum Classic, we're in a weird situation right now. FTM, Gala, GTC, ICP, ID token. They've had some really good rallies that come out of nowhere, but typically, when I look at these types of tokens, I'm like, let me put in a small amount of money and let that turn into a lot of money. Let's not put a lot of money into these types of tokens that really don't look that good. They may bounce with altcoin season, but I can make more money just holding it in Bitcoin right now. Let's go to the 1 hour chart. There we go. Excuse me. Medium rare is the best temperature for a steak there is. You are correct, but you want to know how those bastards cooked my steak. I asked for medium rare, and they gave it to me like medium well, I think is what it was. Like a little teeny bit of pink. I was so pissed off. That was a $125 steak. I was ticked off. So I asked them to redo it. Let me show you. While waiting for, basically Jerome Powell to come out. We basically have another 73 minutes left. Dude, all my friends are having babies. I don't got nothing. Profile. Here we go. See, I had my steak, had a little bit of it with some creamy horseradish sauce, some fries, whatever drink, and my sparkling water. There was some chill dude singing at his piano and whatnot. But like, they overcooked that steak. They made me another one. It was good, but I had to wait longer. I had to wait for it. So, $85 extra? Yeah, exactly. Yeah, inflation sucks. He tightened for too long, sure did. 100K only if Trump wins. Well, that's the thing. We should reach 100K before the election even occurs. That's kind of my hope here. Now, that being said, Trump winning will give a boost to crypto of note. That's obvious here. Kamala Harris had a chance. She really had a chance to really try to get some crypto voters. But the moment she said, I'm not going to go to the Bitcoin conference, that was the premier event for everybody in cryptocurrency. There's literally 2 events where you can come out and talk. There is going to be Consensus, and then there is going to be Bitcoin, in this case, Nashville. There are other events out there like Ethereum, Denver, and some other cool cool events that happen around the country. But typically, the place to be is going to be the Bitcoin conference and Consensus. The amount of parties, the amount of influential people that come rolling through there, there are a lot of them. And they all talk, they congregate. You can try to figure stuff out. And even if she were to just have a short speech saying, hey, I'm going to, I'm going to be more open to crypto. I want to see Bitcoin thrive. I want to see the industry thrive. Something very general like that. I think she would have been able to get at least a little bit here, and of course that'd be good for Bitcoin. Like the first thing that I thought when I heard that Donald Trump was going to be at the expo or the conference was not, oh my God, Donald Trump is there. The world is going to be great and la 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 land. My first thing was like, oh my God, let's get Kamala Harris in there now, because then we can have all 3 of them, RFK, Trump, and Kamala, and we can all see them try to say, hey, we all want crypto to thrive together, and that could really get some good shit going for crypto. But no, she, I had a video a few days ago before I left for Nashville. It was a picture of a football player with Kamala Harris's head attached to it, and she was stiff-arming Bitcoin because she was like, nah, I don't need those votes. And I think she'll regret that. The crypto community is a lot larger than people want to give it credit for. There is a lot of people that hold it, and now there are a lot of people on Wall Street that hold it as well. It is very important that they understand that. And she's trying to go through the CEOs. And this is America. We don't listen to CEOs here. We don't necessarily listen to the oligarchs. We're like, no. I want crypto to go up. I'm going to choose the person that is best for crypto. And if that's your main issue, you're going to vote for Trump right now or RFK. You're not going to vote for Kamala Harris, which, again, is bad for Kamala Harris. Everybody has their own issues. Like, if you want immigration, you're going to be voting for Trump. If you care about abortion, you're voting for Kamala. Nobody's going to get mad at you for your priorities, but, damn, don't be surprised if the crypto community just says, fuck off, basically. You're going to have to work for those votes. And as somebody who's been in this field for a while, there's a lot of diehards in crypto. And they will choose this as the number one voting, issue. We'll have to wait though. Well, it may not be enough to keep her from winning or stop Trump from losing or whatever you want to call it. We'll have to wait and see. The media has done a 180 right now, and I was looking online here to kind of just see what the gist is. The media went from trashing Biden to praising Harris, and that freaks me out. I don't like how the media can change on a dime altogether. It freaks me out. Again, I'm not like a total conspiracy theorist, but I'm like, it's all fitting too well. It freaks my mind out a little bit more. And hey, Moonshadow, okay, happy to see you. Crypto is about to be on the news every day. I hope so. I mean, we're seeing it happen a lot more. So if I go over here very fast, let me open up a new window. Let me pop this open right here. Let me do this to CNBC Bitcoin. There are still plenty of stories out there these days. Let me see if I can find one here. There you go. So I'm going to turn this audio up a little bit over here to 85. Turn the audio on so you can hear. Turn my headphones down so I can put my headphones on. And then we're going to go over here and turn this off and turn this one on. That one on. There we go. All right, so this is the Bitcoin Inc. CEO discussing Trump's bet on the crypto voter, okay? So let me move my audio down very fast. Okay, I'm not going to worry about it. My audio system is like frozen, but I think if I turn it off, it's basically just going to make it so you guys can't hear me. So I'll be listening in spirit with you guys, like this.
How do you know that he's not just saying these things to you and to the crypto community to shore up support ahead of the election and to get votes? After all, in the past, politicians, including him, have said things that they didn't necessarily follow through on. He talked about getting universal health care for everyone in the U.S. and for the 2016 election, and he tried to repeal the Affordable Care Act. He said he wouldn't raise taxes on, or he said he would raise taxes on the wealthy, and he didn't do that with the 2017 tax cuts when he got into office. How do you know that he's going to follow through if he is elected?
Well, first off, in terms of Donald Trump, his position on Bitcoin evolving, I would say Bitcoin's biggest cynics, who start as Bitcoin's biggest cynics, become the biggest champions of Bitcoin. Michael Saylor started as a cynic of Bitcoin. I started as a cynic of Bitcoin. I mean, when you first hear about Bitcoin, its potential, its promise, it sounds too good to be true. And so I think that that's the natural evolution that anyone goes through. They start very skeptical, and over time, as they have more and more exposure to it, they go along this intellectual journey where they become more interested in it. And I think
he didn't fall into the trap. That was good. That reporter laid up a big old juicy trap to like talk about Trump and lies, because I don't know. I feel like politicians lie a lot, and they will always lie a lot.
Also, what was really impactful on the president, he has family, children that have gotten very involved in Bitcoin, and I think that kind of mirrors the experience that a lot of people have had. Like it's a very tech savvy, youngest generation type technology, and so once you start having family members get involved in it that expose you to it, you become more open-minded about how it works, what it is, and what its potential is.
Bitcoin still reached a record under the current administration, and there were 2 spot ETFs approved. Why is it seen that this administration was so tough on Bitcoin?
It's like they don't even know Gary Gensler exists. This is why I typically don't watch Bloomberg crypto, but like everybody and their mom knows that this administration has not been friendly on Bitcoin, and Biden vetoed the freaking bill that let Wall Street firms hold Bitcoin on their balance sheets. If you can't hold on your balance sheets, what are you doing?
When so much had gotten done.
I think it's important to highlight that the way the spot ETF got approved is we had to sue the SEC. So it wasn't like they gladly did that. It was a multi-year litigation, and so it has been pulling teeth this entire time to work with the current administration. They have blocked public offerings from going to market. They have cracked down on developers. They've arrested developers, and they've proposed horrific tax policies and tax schemes for Bitcoin mining. So it's been a very tough administration to work with, and only since we have started, supporting the President Trump's campaign have we seen a pivot in messaging from the Democratic Party that, hey, maybe we do want to work with you.
Okay, and David, so we only have 30.
See, I feel like for the major news outlets, crypto is still such a new thing. They just don't understand anything about it. The fact that she had to ask that question, saying, isn't Biden doing such a great job? This current mission doing such a great job on crypto policy. Like, the fact that she could ask that question is crazy. And I don't think she's doing it out of just pure malice or anything. I just don't think she really understands what she's talking about.
3 seconds left, but what would you have to hear from the Harris campaign to call her pro-crypto?
You know, it's beyond having to hear from her because she's in power right now. If she wants to start to reset the relationship, she needs to not sell America's Bitcoin. She needs to fire Gary Gensler today. And she needs to free Ross Ulbricht from prison today. And so they can't be words because she's actively in charge of the country right now. She needs to act on those 3 things. And then we at least would be in a place where we can have a productive dialogue.
Woo. All right, let's take that off now. Let's move this back over here. No, that one. There we go. All right. But you guys get it. You know, I like hearing people that actually know what they're talking about talk to reporters, because it just kind of shows you guys, like, guys, I'm going to put out a poll very fast. How would you rate those journalists and their questions between a 1 through 10? Just say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 is being they were asking great questions, or like 1, they didn't really know what they're talking about. I'm, of course, biasing you right now to say something closer to 1 and 0, but you guys get the point I'm trying to make. Yeah, let me know, because maybe some of you guys thought those were actually good questions. I just did not. Now, let me go over here and I'm going to add a poll question, though. How many rate cuts this year? Let's say 1. Let's say 2. Let's say 3. Let's say 4 and start the poll. I'll have to do another version of this, I think, eventually, because it's not just about the number of rate cuts, but it's about how much is cut each time. I would assume they're looking at 0.25% rate cuts coming up, but maybe they'll do a couple of 0.5s if things get a little bit testier out there. But yeah, we'll have to see. And hey, Moonshitter, happy to see you again. Oh, I think I said that. Kilo, happy to see you again, my man. And thanks for being a member, as always. Just waiting for on Buddy to say we are cutting going forward. We're not going to get that for a while, I don't think. I'm hoping we get it, though, sooner rather than later. The fact that gas prices are about to go up is going to tick people off, though. The Middle East is just fucking shit show right now. Complete shit show right now. Which super trend do you use on TradingView? Trying to find the exact one. I believe it's the one by Kevon. So if you go over here, you type in super trend. I know you guys can't see it exactly. Yeah, it's right here. Super trend by Kevon Ozblick. I can't pronounce it. Has about 43,000 likes, though, to it, so it is pretty popular there. You can go over to the README section, and it'll kind of show you how he uses it and that type of stuff. Typically, what you might want to do is you might want to play around with the settings a little bit, though. I don't use the typical settings they give me. I typically try to put more lag on it because I don't want to have so many buy and sell signals. I like for the buy signal to be able to like buy it, and it works out for about a few hours, and then you can do the sell signal. It works for a few hours, you know. That type of stuff. But generally speaking, you have to understand the overall momentum of what's going on. So if the daily chart is very bullish, you're typically only going to be following the buy signals from the super trend, not the sell signals or the short signals, I would say. People should talk more about the technology instead of the currency aspect. I think they do, but I don't think the news wants to talk about it all too much. So some of the things that I do on this channel, I have contacts out at the Bitcoin magazine, Coinbase, and whenever there's a story that they want me to talk to you guys about, I'll usually bring it up because I find it to be very interesting. But fun fact, it's usually pretty boring. So let me go over here. Here, let's go over to the Bitcoin magazine so you guys can see what I'm talking about here. All right, a lot of recaps here, a lot of recaps. There you go, here's one. Right, Russia legalizes Bitcoin and crypto for international trade to bypass sanctions. That's all good. That's all politics and stuff, but you can read it there, you know, yada, yada, yada. On the other side here, if I keep on going down, let me see. Here we go. Google Robinhood veteran aims to bring Bitcoin multi-sig to the masses with Thea. And then you can kind of read what this is. Number of employees, 7. You can go over here to the website, see what it is. No hassle Bitcoin self-custody. Is your Bitcoin secure? And then you can see it's backed by these things. And then you can kind of read the story about what they're trying to do. Now, typically, when I look at this story, it sounds like these guys paid for an article to be made about them so they can get more traffic and hopefully some investments. But, you know, there's a lot of stuff here. Now, all this stuff is basically about the conference. Let me go over here to Coinbase, not Coinbase, CoinDesk here. Right? Does the SEC really have jurisdiction over NFT art? 2 artists sue the SEC to get an answer. Right? So it's just absolutely, like, there's a lot of stuff going on. People usually just don't care too much about it. I'm going to try to start making some news videos about these topics, but I don't really expect many views to come from them. So I'm going to try to figure it out once I get this new content I'm making out and about. But I'm hoping to have that video by Tuesday, I believe. So we'll have to see. So I'm seeing 171. Okay, so yeah, generally low, but still kind of in the middle range right there. And hey, Max, I know it feels weird to be streaming during the day. I feel so weird right now. I feel like it's like 5 o'clock. My internal clock is fucked up from Nashville. But I'm happy to stream with you guys. We still got a while to go. Let me go check on the Federal Reserve. Yeah, we got 57 minutes and 50 seconds before we actually see Jerome Powell talk. But I wanted to chill with you guys, right? I think most influencers are probably going to start streaming around 10 to 10:30, maybe 11 o'clock when the announcement comes out. I was like, you know what? I'm up and about. You know, let's start this stream. Let's go. And what I did do this time, which I think is actually better, I did see that I did let you guys know ahead of time when I was going to be streaming, and I think that helped out a little bit too. So after this stream is over later on, and I have my later stream at like 5 o'clock or 6 o'clock, I think it's going to be permanently set to 5 o'clock Pacific time. I'm going to let you guys, I'll have the other stream set up. And then I might have one later on tonight around 12 o'clock or something. I'm going to try to do some late night streams because the way my channel is going here, I'm gearing up for some big stuff, but like it's just time consuming stuff. And hey, Kilo, I could try to take a video next time I come home with Loki. He acts the same way every time except for like different varying levels of excitement, but his tail has turned into a fucking weapon. And so when he gets really excited, his tail whacks me and it's like whipping my soul and it just hurts so bad. And I usually just let him outside to run and then we play outside for a little bit because he's really excited. But yeah, I'll take a video today. Get ready for more short form content because remember, the way YouTube works is so freaking weird. I can only give you guys 3 notifications in 24 hours. Not that YouTube even shares all of my notifications, right? But one of those videos is for like the daily updates, which I'll do. There's no daily update obviously today because I'm here with you guys live. There's going to be one for the stream that happens in the afternoon, and then usually something else that I might cover. And so if I do 3 in one day, then there's like a 24-hour rollover period. So the next ones will give no notification. So I can't just post anything I want to. But again, we'll see how this works out later on. Short form content, those notifications, there is no notifications for them. So I can take videos of Loki all day long and show him running and stuff. And I think you guys will enjoy that. I'll post can I post a short right now? Let me see. As we're kind of waiting for this to go. Let me see right here. Wait for a second. Go over here to YouTube. Short. I don't have any recent videos of Loki that aren't of him eating just food, but I can show you an old video of him. Let's see. Let's see. There you go. I can upload a 7-second video of Loki being a puppy. There we go. Oh, I called his name now. He's coming over here. You guys can say hi to Loki very fast. Loki. Puppies. Oh, see, he wanted to see himself as a puppy. Oh, hey. Hello. Yeah. Yeah. Sorry, I didn't mean to call your name. You okay? Wagging your tail? Your treats are upstairs. I'm so sorry. Oh, you get a little head rubs. But yeah. So, let me update this. Puppies. Hashtag shorts. Hashtag puppies. Hashtag dogs. And then I'll post that. And then once it's done uploading, I will share it with you guys live here. There you go. But yeah, I do need to start posting a lot of those videos. But I think short form is the best way to do it. It's 1:30 time to see the decision. The heck? Why is my... Oh, I see what's happening here. Okay, never mind. No, we still have like an hour left. I mean, what I can do is do this very fast. Let me see. I can pop open CNBC very fast and just see what's going on here. Now, I don't pay for cable because I refuse to, but there are plenty of websites out there that let me do this. Let's go over here. I'll let you guys know if I see anything. Right now, CNBC is on a commercial. They're talking about some free wireless pro, and some dude is trying to sell me something. I can't tell if it's the guy from Shark Tank or not. Doesn't look like him. It's like a fake guy from Shark Tank. Ah, it's weird. But yeah, I'll let you guys know. Right now, it's on commercial. XRP, but it's safe. There you go. That's the way to put it. Do you think XRP will retrace to 54 before shooting up? Nope. They're talking about MasterCard. It's up 3% today. Now here's XRP. Actually, just over the last hour, it got rejected. So there you go. You were talking about 54 cents though. Let's go to the 4-hour chart. Not likely here. I mean, 54 cents is all the way over here. The way this would happen is if we have a bad FOMC decision and he's very, very hawkish, and then we have to come back down for a number of days here. You know, right now on the verge of breaking out, coming back down to 54 cents is like coming all the way back down to here. If we come all the way back down to here, we're most likely going to be falling down even further. So it'd be very, very hard for that to occur. It could, but you might want to wait to see if maybe it come back down to 55 at the worst, maybe 56, 57. 54 seems like it's going to be a hard way to get back all the way down there. Weekly momentum is strong. Daily momentum is okay. 4-hour momentum is okay. 2-hour momentum is okay. 1-hour momentum is bearish. 30 minutes bearish. 15 minutes bearish. 5 minutes okay. So yeah, it's definitely looking still okay here. But coming all the way back down to 54 seems like it's going to be difficult. Let me pull out a Fibonacci just to kind of see what's going on here. Might come back down to 58, then 54. But that means it's going to be a full-on rejection from this, and it's not going to break out, which will be a pain in the ass. But yeah, it could technically come back down, but it'll be a hard sell. Might take about a week to get down there if something really bad happens to the market, you know? Keep an eye on what may happen over the next couple days as the 20-day moving average moves up. You could definitely see it coming down after that. There you go. Meanwhile, Bitcoin is just trying to have something bullish here. UFA downgrades MasterCard and Visa. Dude, MasterCard and Visa are my children. I love those things. I've been dollar cost averaging into those things since I was in college. And hey, David, happy to see my man. Cospa is going to 50 cents. You have no doubt about that, or have no doubt about that? It's been doing fine. It's been doing not fine. Good. It's been doing very, very good. Typically, I like to swing trade Caspa because it does have some nice swings. It can definitely make some good moves here this cycle. One thing actually here for CoinMarketCap.com, we do see some stuff moving today. You got Beam, you got MOG, Aave, Caspa right there. We talked about that. Popcat, Lido DAO. We're definitely seeing some nice moves. And what you're noticing is a lot of these tokens that are moving up a lot today, they typically have been doing well over the last 30 days. So Beam is up 20% last 30 days, MOG is up 13%, Aave is up 15%, Caspa is up 11, 12, Popcat's up 12, 13. So if you guys are optimistic about Bitcoin doing well, might want to take a peek at these meme coins and see what's actually popping off here. Once you get to those lower market caps, there's a lot to choose from. I mean, a lot to choose from these days. CB. You got Cat in a Dog's New World, meme coin. Look, meme coin is at $326 million market cap. That is tiny right now. Ponk, Turbo, Dog, Pepe coin, MAGA, Moo the Bull, Apu, non-playable coin, Baby Doge coin, Harry Potter, Obama, Sonic Inu, whatever the fuck that is. Y, Cock Inu, Slurf, Andy, Land, Landswolf, I don't know that. Miro, you got a bunch of stuff here to work with, right? You got a bunch of stuff. And so if you're expecting 1,000%, a few thousand%, whatever it may be, if you just buy and hold, you could definitely have some fun with this. That being said, these aren't meme coins with a low market cap. So don't put your, don't mortgage your house for this type of stuff. There you go. And hey, Nicholas, happy to see my man. Let me pull this up right here. I want to see if there is any news about Bitcoin right now on Twitter. Actually, I think I just saw some Bitcoin shoes here. 1 Bitcoin and 1 Cybertruck, what's your pick? This was at the Bitcoin convention. Let me see if I can listen to this very fast. From Nick O'Neill. Is my software working now? My software is not working now. I'm going to close the program very fast and open it back up. We'll see if my audio works after this. My audio is still working. Awesome. Go over here and what's it called? Go XLR. There you go. Oh, there you guys go. All right. Test 1 2 3. Test 1 2 3. Oh, audio went down. There we go. Outputs. Hello. Oh, mic monitor. There we go. Oh, yeah. So much better. Okay. Now I can put my headphones on. You guys can chill and kind of wait for this to hit. I don't know. Wait, I met that guy.
If you could have 1 Bitcoin or a Cybertruck, which would you prefer?
Oh, Bitcoin.
1 Bitcoin. A Bitcoin.
I'd probably have the Bitcoin.
I'd rather have a Bitcoin than a Cybertruck.
1 Bitcoin, super easy. Cybertruck is a coin.
1 Bitcoin all the way, baby. You know how that goes.
1 Bitcoin or 1 Cybertruck?
1 Cybertruck.
I'd probably have to go with the Cybertruck, and then I would sell it and flip it into Bitcoin.
People see you with driving around the Cybertruck. You can use that to get more business deals. 1 Bitcoin can in 1 year.
Wow, okay. I like that. If you could have 1 Bitcoin.
Surprising answers. Very surprising answers here. Bitcoin new all-time high is now confirmed in August now. August is bearish for Bitcoin. Justin Gary Cardone donated 12.8 Bitcoin worth $852,000 to Donald Trump. This is the most important moment in world history. Let's see. I mean, everybody's taking notice, I would say. Legendary rapper Nas on buying Bitcoin at $500 exactly 10 years ago. He's still holding. Oh, geez. That is a real holder right there. But you can't use Bitcoin if the internet goes down. Okay, this guy looks a little too crazy for YouTube here. Oh, this is too... We're not going to listen to that whole speech. Trump promised Bitcoin a strategic reserve. The USG holds $2 billion from seizures. 2 days after Trump's promise, the Biden-Harris regime is dumping Bitcoin to hurt the price on investors. You don't hate them enough, vote Trump. I don't know if it was sold. I think it was moved somewhere, right? We'll have to wait and see. We'll have to wait. I can't recall if they sold. The U.S. government didn't sell anything. I feel like if the U.S. government sold Bitcoin, we'd be down in the 50s at this point. The fear coming from that would be absolutely immense, right? Back over here very fast. Nas is the GOAT. Yeah, there he is. El Salvador proposes using Bitcoin for trade settlements with Russia. It's getting started. Again, it's getting kind of crazy how much people are turning to Bitcoin to get around the traditional financial system, you would call it. 11 years of difference in the Bitcoin conference, how it started. Yeah, it's come a long way, that's for sure. I didn't even know what was going on. I think, 11 years ago? Let's see. Yeah, 11 years ago, I was in high school. People have Bitcoin but never post anything. Yeah, not everybody wants the world to know that they have Bitcoin. Not everybody in the world wants them to know they have Bitcoin here. We're looking at Bitcoin dropping from 70K to 65K overnight. We've all been there. We've all come to accept those moments in time, But we'll be okay. When you have a Bitcoin for 10 years... Oh, geez, yeah. The ability to just hold at that point is going to be crazy. U.S. Senator Bill Hagerty explains why he loves Bitcoin at the Bitcoin 2024 conference in Nashville. Let's see what he has to say about that.
So can I start off with a
personal question then?
Yeah.
You sure?
Sure.
All right. Why do you love Bitcoin so much?
Wow. That gets to the DNA of a person, right?
Yeah.
Because it really gets to the DNA of this state and of so many Americans, because I love liberty and freedom. I don't care for centralization. And the notion of autonomy is something I think every American appreciates. Go back to our founding fathers. You know, the whole notion of federalism.
Mm-hmm.
And the authorities not explicitly given to the federal government should be reserved to the states. Yet we have a federal government right now that's trying to grasp as much authority and power and centralization as they can. So it's very basic and very fundamental to me. One other thing, the innovative capacity of America is being demonstrated right now in this industry.
Mm-hmm.
And if we don't nourish it and create the ecosystem for it to thrive here, it'll go someplace else. I want to see America win because at my core, America is the winningest nation ever, and I got to see it happen here.
Oh, there you go. Decent answer. Michael Saylor was talking about some stuff there. If Bitcoin breaks 74,000 next 72 hours, I will give 1,000 Bitcoin to one person who likes. Yeah, that is the biggest lie. Bitcoin monthly candle about to close. Seriously, don't stress yourself. It doesn't get much prettier. Month 20 of a cycle that looks like all prior cycles to date. Big base built. Yeah, we're hoping we have a nice move. But we still haven't broken out yet. The breakout is what I'm hoping for at this point. Oh, Nas also made a fortune on Coinbase. Oh, I didn't know that. On the IPO, did not know that. When you discover Bitcoin, your entire life changes forever. You're poor for a while before you're super rich. Then you're poor again, and then you're super rich. Germany just checked the Bitcoin price. Dude, Germany selling that Bitcoin was wild. I mean, you know, yeah, I doubt their technical analysis. Let's just say that. Maintenance man at high school used the school's electricity to mine Bitcoin. Monthly bill was an extra $18,000. Holy shit. I mean, I'm guessing he was making some good money for that. My God. Anything else here? Justin, Japanese public company Metaplanet and Bitcoin Magazine partnered to launch Bitcoin's Magazine Japan. Oh, that's interesting right there. A lot of cool stuff happening. Bitcoin is a scam. Donald Trump's 2024 Bitcoin conference speech recap. Oh, yeah. Oh, Just Infidelity International lists a physical Bitcoin ETP on the London Stock Exchange. Oh. See, there's so much stuff happening right now, and it feels like we're missing out on so much of it because we just, we all have our lives to live and things like that. We're going to be in a good spot here. Give us a few years. It's going to be great. Let's see. This is not Bitcoin, Ethereum, or even shitcoin. It's Microsoft. Yeah, Microsoft did not do well. I think their Azure software didn't sell as much as they were hoping for. So, you definitely saw this nasty move. What did it come down? What, 425 to 392? Ouch. Yeah, that's not good at all. But again, you guys are going to have to get used to this. I don't think people with 401ks or have assets in the stock market, I don't think they truly understand what's happening right now. Because of all this money sloshing around in the system, where a stock might normally come down 10, 15% during a correction, maybe 20, 25%, you could see stocks come down 50% during a correction this year, and it could really cause a lot of chaos. Now, actually, here, let's listen to this very fast. Can I pull this over here? This is Mohammed El Salarian. He's just a great guy.
Welcome.
Thanks for having me, Kelly.
Do you think they should cut today?
I do. I'm in the camp that they should cut today because the economy is weakening much faster than they realize.
What do you point to for that?
That's me. Yeah.
So first, I listen very carefully to what the companies are saying, and whether it's Starbucks, McDonald's, PepsiCo, you can go down the list. They're all pointing to softening demand and a loss of pricing power. Secondly, I look at the cracks in the labor market, and I worry about that. And then I also look at what's happening to the lower segment of the consumer, and there's real pain there already. So
boom, real pain. See, this guy gets it. Oh, my bad. No.
Is because I'm finally starting to feel bullish. So that must be a sign, because I have to tell you, I've been waiting. The leading indicators have been inverted for like 2 years, right? We know that the classic signs have all been pointing towards a slowdown, ISM manufacturing and so forth. But then jobless claims are holding in there. Yesterday, I mean, the number of job openings rebounding the way that it did, consumer confidence, okay, you could quibble with some components of it, but overall it's improving. I don't know. And yet Michael Dardis says, he's in your camp and says, kiss the soft landing goodbye. You know, a harder one is coming.
Mm-hmm.
So I'm not kissing it goodbye. I'm saying a 50% chance. Look, we are totally
50% is a huge chance.
Pandemic savings. Too many have maxed out their credit cards. So if we lose labor income, then we are in trouble. So yes, the labor market becomes absolutely critical, but there are no other spare tires right now in this economy.
But I wonder if the labor market looks fine, right? I mean, the best leading indicator we have, jobless claims, it's pretty tame. Now, it's not going to break out until we're on the precipice of that slowdown. Yes, the unemployment rate has risen, but we also have some structural things going on with this immigration surge. So, you know, if it keeps rising, okay, grant that, but I respect Claudia Sahm for saying in defiance of her own indicator that maybe it's different this time because of some of those factors.
And it could be, it's a balance of risk, ultimately. So on the inflation side, we've made progress, and today's statement will welcome further progress in reducing inflation. I think the inflation rate will settle between 2.5% and 3%, where most people would view this as price stability. Most would view it as consistent with anchored inflation expectations. So that side of the mandate, if you don't over-obsess with just a single number, 2%, is fine. It's the other side of the mandate that's becoming more risky. And you'll see this again today. I suspect Chair Powell in his press conference will seek a much more balanced risk and bring up the risk of the employment mandate being threatened.
Yeah. No,
typically he has been more hawkish here. So right now he's talking about a little bit more dovishness, but not complete dovishness at this point. And really start to talk about the factors that will for sure make him say, hey, we need to start some rate cuts here.
Potential GDP is higher than we realize.
No, it could be. And that surge has been a positive supply shock. There's a question mark as to how long it's going to last. Some economists think we've had the best of it. Mm-hmm. But it has been, you know, this has been an exceptional economy. U.S. economic exceptionalism has been incredible. You know, we got numbers that Germany slipped into a negative GDP growth recently again. The U.S. has been really the star performer, and we don't want to ruin this.
That's been because we printed so much money, and only we can print out so much money to keep our economy going, although it does lead to some inflation.
You would say if they don't cut by, what, September, then that would definitely be a mistake.
Yeah, whether they cut in July or September won't make that big a difference. The problem is this is a highly data-dependent Fed. It's overly data-dependent. And high-frequency data, as you know, Kelly, is noisy. We saw today with the Eurozone inflation number going back up, they could get a bad inflation print. And if they are overly data-dependent, then next thing we know, they don't cut in September, and then they'll look at November. And by that time, you have the lagged effects of the interest rates, you have the higher for longer, and you have already the weakening structure, and then you really start to worry. That's why, look, I would rather they cut today. I know they're not going to cut today. If they cut in September, it's not in the end of the world. But if they get derailed from September, then the 50% chance of a soft landing goes down quite a bit.
Yeah, and you could see that maybe a couple. So if they're not data dependent, what are they? How else do you make a decision?
So you should be forward-looking as well. You never drive a car looking just at the rearview mirror. You also look at the road ahead. And you have quite a bit of indicators suggesting what the road ahead looks like. They got burned badly in 2021 when they did take a look forward and ended up with this transitory inflation.
Transitory.
Cautious, but they become overly data dependent. So what would be good for the US economy is for them to be more balanced between backward looking and forward looking indicators.
All right. It's you know.
Or that's the end of the talk. I don't want to stay too long on it just because you two might get mad at me. But I have Chair Powell ready to go in 35 minutes. We are still waiting for him at this point, but you know, it's going to take a minute here, another 35 minutes or so. Let's see what the poll question. So I asked you guys how many rate cuts there are going to be this year. 50% say 1, 31% say 2, 8% say 3, and 11% say 4. Wow, you guys are hoping for a lot of rate cuts this year. And hey, Dr. Mike, happy to see my man. Hello from Romania. How will the FOMC impact the market? Well, right now, it's not so much about what the FOMC is doing. So, like, we already know for the most part, everybody's priced in the fact that we're not going to be having a rate hike and we're not going to be having a rate cut. Now, if we do one of those things like a rate hike or a rate cut, that's going to make the market move by a lot. It's going to be kind of crazy, actually. Now, but that's not supposed to happen, at least today. What's going to really move the market here is in about 33 minutes and 40 seconds, we're going to hear Jerome Powell speak at a press conference. He's going to read a statement, which is going to be given out in about 4 minutes, I believe. And we're going to see the market have a little bit of a move pretty soon. When he's giving his statements and when he's answering questions, depending on how dovish he is and how hawkish he is, that will make the market move one way or the other. If he is very hawkish like he was last time, you're going to see Bitcoin go down and the dollar index go up. If he is more dovish and composed than last time, you're going to see the market go up and you're going to see the dollar index go down. That's kind of the gist of where we are at this time. It is going to be very, very important to listen to what he has to say. Fairly soon, in about 3 minutes, you might see Bitcoin start to make some little bit more moves here. What I can actually do is actually pull up that CNBC again here. CNBC stream. And then have the audio off like it is. I'll shrink this down a little bit here. There we go. And then if I see the announcement, I'll let you guys, see it and I'll pull it over here. I'm not going to make it too fancy at this point in time because, again, YouTube might get mad. I'm multi-streaming these days, so Twitch might get mad, Trover might get mad, Twitter might get mad. I'm not trying to tick off all these social media accounts. So we'll see. But yeah, things right now are still looking fairly good. The overall vibe, though, like we talked about before, let's get out of the meme coins here. Everything is pretty much unch at this point. We're down 1%, we're up 1%. A few things like cost are up like 6%, but most things aren't really doing anything right now because Bitcoin, like we talked about last night, is most likely going sideways here. This is actually important for you guys to see, I think. There you go. This is usually the Bitcoin performance. You can see right here. So 2013, 2014, everything like that. We're in August right here. And typically in August, we go up by 0.269% on average. So it's not technically a great month for us. October historically is a very, very good month for Bitcoin. Same with November and December. I know you guys can't see it because the way I have it drawn, but I will do this for you guys. They said the Fed decision is imminent here, so I'll pull this over in a second. But you guys can see, last few years, August has not been a good month, but typically we're up a little bit here, so we'll see. July, we typically go up around 7% or 7% right there. It's good. So what we're going to do is we're going to put Bitcoin on here very fast. Let's go over here to the 1 minute chart so you guys can see what's going on. I'm going to pull this over. Fed decision imminent, and you guys can see what's about to be said here. Let's take this and make it maximize the plane. I don't really care about the speakers, to be honest here, so I'll just let you guys know when it comes out. There is a little bit of a lag from the time that it comes to me than it comes to you. So if you guys are close to your TV and you guys want to listen to the real live thing about 10 seconds earlier, then you guys can watch it on your own TV. But yeah, the decision is imminent here. I don't care about what you guys see too much as long as you guys can hear what we're saying. But yeah, it is going to be important to kind of keep an eye on everything here. There you go, right there. Let's put it over here just in case. October is historically the worst month for stocks. If no rate cut could see a big pullback. I mean, we're already seeing a pretty big pullback right now. That's the crazy. I mean, we're already seeing a big pullback right now. And that's because, again, we're kind of in this weird tech bubble right now. I'm calling it a bubble. Oh, here we go. So I know it's coming out because Bitcoin's going down here.
The job of a
It shouldn't be a crazy move here because everybody has priced this in, just so you guys understand this.
work for the Fed. Now, they're still.
Okay, I'm just that voice is kind of annoying, so I'm going to turn it off for now and wait for like it should cut off pretty soon and say, hey, this is it. Now Bitcoin's going up. A little bit of volatility here. Okay. If no rate cut, yeah, but we're already seeing a pullback right now. That pullback, now look at that volatility here, Jesus. Yeah, I really don't expect us to not have a massive pullback eventually. I might say it's going to be 30 to 40% with a lot of assets here. We'll have to wait and see. And there's Bitcoin coming down here a little bit more. So this must be no rate cut. And maybe there's some other news here that we just don't know about. We're bouncing off of an order block right there. Nice, easy scalp play for those of you guys that love to scalp. But again, who wants to be scalping at this point in time? Only the crazy people. Only the crazy people want to be scalping right now. Hello, Doggo. Doing okay? Doing okay? Oh, you are. I'm going to have to play with Loki after this. All right, let's see. Still nothing, though. Getting messages here. Oh, no. You guys know I get a ping every time there's a bot comment on my phone. You know how many pings, well, not pings, but messages I get from YouTube? It's quite a bit. It's actually just quite crazy. Red decision imminent. So a whole bunch of nothing is happening right now. You can see there's a lot of volatility on the screen, but it's not really doing much outside of that. What I'm going to do very fast is go over here to the 1 second chart. Oh, here it is. Never mind. I don't have time.
Steve Lee. The Federal Reserve left rates unchanged, but changed its statement in a way that may lay the groundwork for future rate cuts, though it doesn't necessarily guarantee it. I'll start off with the most important changes, where the Fed said the risk to its employment and inflation goals, quote, continue to move into better balance rather than just have moved into better balance. And the committee says it is attentive to risks on both sides of the mandate, not just highly attentive to the inflation risk, which it had been saying for quite some time. They did continue to say that there won't be cuts, or that they don't believe that there should be cuts until they have greater confidence of inflation moving towards a 2% goal. But they did talk about jobs and inflation. Let me go through that. They said job gains have moderated. That's a downgrade from remain strong in the prior statement. They noted the rise in the unemployment rate, but added that it remains low. They previously just said that the unemployment rate remains low. The statement notes an improved outlook on inflation, saying it has eased and remains somewhat elevated, adding the word somewhat. So they're less concerned, as you can see, with the inflation level. I said there's been some progress towards the 2% target, not just modest further progress. Guys, I'll leave it there with really it's a change in the balance of risks, I would say, from one where they clearly indicated they had their keen eye and highly attentive to inflation. Now they're watching both sides of the mandate. But I wouldn't say they guarantee a rate cut in the next meeting. They maybe just laid the groundwork for one if they feel it's necessary and the data cooperate between now and the September meeting. Tyler?
All right, Steve, thank you very much. Stick around as we get back to our panel for some reaction there. I think Steve has characterized it well. It feels to me like the language indicates that the Fed is putting the ball on the tee and is going to whack it real soon.
I think that's totally fair. And that's exactly, they have to talk about cutting before they actually do the cut. So this is the meeting where they're setting that up.
Okay, so it is interesting that they said that, right? That being said, the dollar index is taking this as a more hawkish stance right now. So I want to see exactly what's going on here. I'm actually going to go over here to the Fed. I'm not spelling statement right. That's fine. I bet Twitter is also going to be talking about this. Let me do something very fast. Notifications. Watch a guru. There you go. Oh, no, just retweet. There you go. And then post my reply. Cool. There you go. And then Fed statement. There we go. 2 minutes ago. Let's see. Go over to ChatGPT. Let's go back over here so you guys can see the dollar index and stuff like that. There's Bitcoin on the 5. You can see a lot of volatility here, but not too much craziness. Actually, can't even tell what happened here. The 1 minute chart, you can see all the craziness, but not much outside of that. There we go. And then here is a statement from the Fed. Summarize it and what it means. and then provide the statement. I will do that. There we go. There we go. Okay. So basically, this is the summary of it. So from ChatGPT here. Let me actually just read it off to the side here, so it's not looking all sideways, because you know the way I have my monitor looked up or set up. So basically, it says the Federal Reserve's Federal Open Market Committee, FOMC, has released its latest statement noting that the U.S. economy continues to grow at a solid pace, though job gains have slowed, and the unemployment rate has slightly increased but remains low. Inflation has decreased over the past year but still remains somewhat high. Progress towards the Fed's goal of 2% inflation has been made, though it remains a focus of their policy. To achieve its goals of maximum employment and stable inflation, the FOMC has decided to keep the federal funds rate in the range of 5.25% to 5.5%. The Fed will continue to monitor economic data closely before making any further adjustments to interest rates and does not anticipate lowering rates until there is more confidence in the inflation that inflation is substantially moving towards 2%. Additionally, the Fed will continue to reduce its holdings of Treasury securities and mortgage-backed securities. The FOMC remains committed to adjusting its monetary policy if necessary to ensure the achievement of its economic objectives. The decision was supported by all voting members, including Chairman Jerome Powell. Now, what this means is what they're going to tell us here. What this means, interest rates, the Fed is holding interest rates steady, reflecting a cautious approach as it balances the risk of inflation and economic growth. Rates are likely to stay high until there is clear evidence that inflation is under control. Economic outlook. The Fed acknowledges that the uncertainty in the economic outlook and is prepared to adjust its policies as needed. This suggests the future rate decisions will be data-driven and responsive to changes in the economy. I doubt it. Inflation focus. The Fed is strongly committed to reducing inflation to its 2% target, and this remains a central focus of its monetary policy. And finally here, market impact. The decision to maintain current rates might lead to stability in financial markets as investors see the Fed taking a cautious and measured approach. However, the continued focus on reducing inflation could mean that interest rates will remain elevated for some time, which could affect borrowing costs and economic growth. Now, you guys can see on the chart in front of you guys, this is a Bitcoin 1-minute chart. It is volatile, but it is not too crazy. And I believe it's not too volatile because we all saw this statement coming. There really isn't a surprise in this one. I'm trying to figure out where they got the dovish side of this from, because I'm reading it, you know. I'm trying, you know, maybe it's buried in the article that I just uploaded to it, but it doesn't seem as dovish as I would have hoped. It's not hawkish, it's just not dovish. It's kind of like a 50-50 type of thing, and hence why you see Bitcoin really not doing too much at all. Go over here to the 5-minute chart, you can barely even see what happened here. We had a larger move this morning, right? Based off of that report. Now the dollar index made a move off of this, but still, it's nothing too crazy. We've been here before. So I think everybody was expecting this. There was no surprises. Therefore, the market didn't really have anything too exciting to say. When Jerome Powell starts to talk in about 20 minutes and 21 minutes or so, then you might see the market start to have a little bit more of a volatile time. But at this point in time, we really don't see that occurring. And we'll see here. Pause. I don't know what pause means. Speech should be dovish. No rate change this month. Yeah, that's going to be good news for us, generally speaking. See, Justin, the Federal Reserve says it does not expect it to be appropriate to lower rates until it has gained greater confidence. Yeah, we already read all that type of stuff. So, again, we're kind of in this weird spot. Generally speaking, no rate cuts is something of a more bearish news. But, again, we'll just have to wait and see. You can see on the 1-minute chart, we're starting to come down a little bit more. That means there must have been some new news that just came out, though. I don't really see much new news. So let me go over here. Let me get rid of a lot of this extra stuff. Funds rate, yes. Get rid of that, Okay. So here's what changed in the new Fed statement. This is a comparison of Wednesday's Federal Open Market Committee statement with the one issued after the Fed's previously policy-making meeting in June. Text removed from the June statement is in red with a horizontal line through the middle. Text appearing for the first time in the new statement is red and underlined. Black text appears in both statements. All right, so let's kind of zoom into this a little bit here. It's kind of blurry. Okay, there we go. So they took out the words job gains have remained strong, and they replaced that with moderated. They took out and the unemployment rate has remained low to moved up but remains low. They added inflation has eased over the past year but remains somewhat elevated. In recent months, there has been modest. They removed modest and put some further progress towards the committee's 2% inflation objective. Okay. So I'm not even gonna read all that type of stuff. Oh, let's see. The economic outlook is uncertain, and the committee remains highly was taken out, and instead of remains highly is attentive to, instead of inflation, the risks to both sides the dual mandate. So basically, they're saying we know we've been talking about inflation for so long, but we're going to also start to pay attention to the job markets and the economy to make sure that we don't focus on, inflation so much that we cause a recession. I guess that's what everybody's reading into right now. There really isn't much stuff going on here as far as I'm concerned. Let's see. Yeah, that's about it. Oop. And Bitcoin just kind of doing a whole bunch of nothing right now. Now let me put this over here very fast. See what's going on here. Okay, there we go. President Donald Trump begins selling limited edition Bitcoin sneakers. Oh my God. Dude, I don't know. I wouldn't wear this shit. That's wild. The black ones are better than the orange. The orange ones, I mean, you're definitely going to see people wearing these out and about now. But man, it's just, that's too wild. That's so flashy. That orange one is so, somebody could probably rep these pretty well. Those orange ones, guys, you got to have a certain personality to pull those types of shoes off. Oh my gosh. Just spoke at the Bitcoin conference in Nashville, Tennessee on Saturday. It was great. Get your Bitcoin sneakers now. These are limited edition. They are each numbered, and you can now pay with Bitcoin or your favorite crypto. Have fun. Go to gettrumpsneakers.com before they're gone. Okay, so Get Trump sneakers. Oh my God, they're there. Trump sneakers. They're sold out. They're sold out. Oh my God. $499. Holy fuck. 4 randomly autographed and then 15 oh my God. Oh, okay. The fight is sold out. So wait. I can't tell which ones are sold. Okay, so this one, Paul. Oh no, it's pre-order now. So everything's pre-ordered. Okay. So let's check them out very fast. We got these ones with the silver. Oh no, with the orange. But these are different shoes than the ones we just saw too. These are totally different shoes. So these have low. Okay. So they're $229. If I move it up to my size 12.5, is it still $200? Okay, yeah. Jesus. Introducing the Trump crypto president low tops in Bitcoin orange. These exclusive sneakers celebrate the future of finance and the leadership of President Trump, boldly emblazoned with a prominent Bitcoin symbol. The rich Bitcoin orange design, accented with the American flag, symbolizes strength and innovation. This reminds me of those 90s commercials where they're trying to sell you something like a telecommercial, like where they're trying to sell you a pan or the new thing, to help you clean the dishes or something like that. This is exactly what it sounds like. You can imagine that old, typical voice kind of trying to sell you something there. Crafted for style and comfort, these sneakers feature their iconic Trump crypto president branding. Perfect for crypto enthusiasts and Trump supporters alike, these limited edition shoes are a must-have. Elevate your style and stand out in the world of digital currency with these extraordinary low tops. Estimated to ship in September, October, November. Oh my God, we gotta wait over a month for those shoes. Now, strict limit of 3 pairs per person. And wait, $299. The current price is $299, but if you buy 2, we're going to cut that down to $150, a 50% reduction. That's basically what's going on in my mind as I read this. This is exactly in that same exact format there. I don't know. Would any of you guys buy these shoes? Let me know. You got the black ones right here, the Trump crypto president high tops. Those are also $299. How does this get sold to you guys? Crafted for style and comfort, these sneakers feature the iconic Trump crypto president branding, perfect for crypto. Oh, that's the same exact thing. See. Oh, introducing the Trump crypto president's high tops in luxurious black. These exclusive sneakers celebrate the future of finance and the leadership of President Trump, boldly emblazoned with a prominent Bitcoin symbol. Their rich black and orange design, accented with American flag, symbolizes strength and innovation. Yeah, I'm going to have too much fun with this shit. I'm not going to buy these. Oh, the fight ones are already sold out, though. Introducing the fight high tops on July 13th, an assassination attempt was made on President Donald Trump's life at a rally in Butler. Despite the attack, Trump stood tall and resilient, leading the crowd with a powerful chant, fight. Right? So basically, yeah. That is wild. Fight. Trump fight boot. I like how the boot is cheaper than the shoes. Doesn't that tell you something crazy? Introducing the fight boot. Oh my god. Dude, the guy is milking this for everything. Fight, high tops black. Dude, there's fucking blood on it. There's blood on it. Oh my. Dude, this is, I don't know, they're going crazy with it. They literally got blood coming from his ear to his cheek. Oh, dude, that is wild. That is wild. Never surrender low tops. POTUS 45. You should just have some like golfing cleats or something. POTUS 45, T 45, Trump 45. Wait, Victory Cologne by President Trump. And they got women cologne and milk. Oh, they got the golf shoes. Oh my god. Oh, I didn't think they were gonna have the golf shoes. They're gold. They're sold out. Never surrender, low top black, Trump Doral casual golf. Dude, the guy is Trump freedom cooler. Smells like freedom and moldy water, you know? Trump slides. Okay, so I don't mind the look of these, but I know for a fact this style of slide is incredibly uncomfortable and incredibly overpriced. I've had lots of slippers and stuff in my life. I'm wearing slippers right now. I don't even wear shoes inside my house. These are going to be shit. I can just tell by the size, by the look of them. And then so that never surrender. Oh my god, yeah, this. The way his neck looks on there is just so freaking hilarious. Join Trump sneaker community. Be part of history. All right, let's see what Instagram has to say about this. The page isn't available. See, as somebody who works in finance, you know, and does a lot of stock market stuff, I look at links all the time. Exchanges. Wait, exchange. What is exchanges here? Oh, all sales are final. Okay, I get what they're saying. Processing time. Okay. Let's see. Oh, there's also a $10 shipping fee. Damn, buy them all suckers on Amazon. And then what's this right here? Oh, Truth Social. Get Trump sneakers. I don't have an account on Truth Social, I don't think. Maybe I should make one eventually. There you go. The Trump crypto high tops Bitcoin orange are sold out in record time. Thank you. That is wild. Sold out. Let Phil copped mine. Dude, Phil, what are you doing? Just spoke. Okay, so there was $500. Oh my, $528 for sneakers. Woo! I mean, I don't know. You guys paying $529 for sneakers? Let me know. I'm curious here, guys. Bitcoin's moving down a little bit here. Nothing too catastrophic. Basically, since this started, Bitcoin has moved down about 0.5%. So as we look at this right here on the 1 minute chart, this may look a little bit more dramatic, but it's only 0.5%. Just want you guys to understand that as we kind of pay attention to what's going on here. But yeah, those sneakers, interesting there. We also have less than 10 minutes before he starts talking, so get ready for Jerome Powell to talk here. How much? Yeah, too much here. And hey, Zachar, the Bitcoin logo on the shoes looks so low quality. That should be the part of you have the most detail in. Wait, it looks low quality because it's just shitty photocopy? Yeah, I mean, it doesn't look good. I'm telling you that now. It's not worth the money. I mean, as soon as I saw those slippers, I was like, oh shit, those slippers are not looking good. I mean, I imagine somebody wearing them, just take a few pictures, then putting them back, on the shelf to wait until the next Bitcoin convention, then wearing them to the Bitcoin convention, and then that's about it. But let's say Trump doesn't win in November, the next Bitcoin convention is in May or something, they're not going to wear those shoes. So it's kind of like, do I want to take that gamble? The diehards will definitely do that. But I mean, you already see they're sold out. They're already sold out, which means they made a lot of money off those suckers. Those shoes. Michael, you cover these events brilliantly. Thank you. Everyone, please send Michael one of these if you agree. I appreciate you guys. Thank you very much. What do you call it? Hey, Kilo. Happy to see you as well. I'm hoping that, we do see some good stuff here. The only thing about my channel, I have to say, is my channel doesn't get many comments. I'm going to work on it. I am working on it right now. But I think I need to have... I think I'm going to bring music back a little bit. Not loud music, but kind of like subliminal, like background music. I kind of just like to hear that while I'm talking with you guys. And that type of stuff. We'll see. I can't do it now because, of course, I want to listen to Jerome Powell talk in 8 minutes. But I got to figure out a way to get those engagement rates up. But I think that just comes with a lot of viewers. I don't think it necessarily comes with, that type of stuff. I think I just need more viewers, and that way the comments are coming in. Because I can keep track of all the comments and see what's happening. Typically, from history, you guys comment the most when the market is crashing. People are freaking the fuck out. That's when I typically see a lot of people commenting on the streams and whatnot. But yeah, it's definitely been one of those quarters where everything's been kind of sideways here. However, we've only gone down again a small amount. Jerome Powell was talking in about 7 minutes here, and I don't think we're going to see anything too crazy from him at this point. There we go. Put this back up here so you guys can see what's going on with me. But yeah, not too much going on. I'm hoping that we can get some longer term trends here, because if this is the way we're reacting to this decision, and we don't really have too much of a big move during Jerome Powell's speech, or press conference as you would call it, I think Bitcoin's most likely coming down then. So, we'll have to wait and see. If you guys want to take a gamble, you guys can buy right now with a stop loss. It looks like about 65,400, a little bit of a level right there at the bottom. You guys could buy right now with that support level, that stop loss, and then kind of wait to see what happens. And I think that'll work out for us a little bit here. Yeah, I think that'd be the best way to play this at this point in time if you didn't want to take that chance. You can see right now there's an opportunity for a golden cross on the 1 hour chart here with the 20 to 50. That could liven things up a little bit. The weekly chart is still bearish, of course, but the daily chart still has a little bit more bullishness left in it. Maybe it's a more neutral bullish, but it's there. It just seems like a risky play at this point in time, like we discussed last night. Most people aren't going to be trading this type of move. You may see that Bitcoin's dropping right now, but this is not even like... We had a larger move at 7 o'clock in the morning. We had a larger move back over here yesterday. This isn't a very big event, apparently, as far as Bitcoin's concerned. Maybe because everybody had already priced this in. And then we're still kind of reeling from the shock from yesterday, or a couple days ago, when we saw the United States government start to move over like $2 billion worth of Bitcoin and stuff. So I think the market may have been more responsive to something like that. But we got Jerome Powell ready. He's going to be talking here in a few minutes. I got it ready. He's just taking his sweet time. 5 minutes and 24 seconds. After that, we should be good. Let me see if I can actually pull up something here. No, I don't need to do anything else. Because after we listen to him, I'll take a break from YouTube for a little bit, and I'll go outside with Loki and play with him. But yeah, things overall working out pretty well for us, I would say. Okay. I wish it was more exciting, of course, but I guess it doesn't have to be exciting today. And hey, Kilo, like I don't turn on notifications. A link when you go live in your Bitcoin Doge stream might help get the word out. Honestly, I don't. At this point in time, I'm just trying to keep those streams alive. So I'd rather them just stay over there and chill for a little bit. I feel like if I were to get them all over, then the views go to like 5 or 6 or something like that, which is really, really bad. And then like the long-termness of the stream is in kind of jeopardy there. Because as you know, as Dogecoin's been going more sideways, Bitcoin's been going more sideways, the views off those 24/7 streams have not really been the best. So I'm trying to keep those suckers alive. So I'm just gonna kind of keep them there. Maybe I'll drop a link or something saying, "Hey guys, I'm live" or something like that. But I don't know. People usually stop in for a few minutes and then leave. I think it's like an average watch time of like 10 minutes or something like that, and then leave. But yeah, I'll see if I should do that or not. Maybe I'll just send you a message or something, you know, whatever, a little message on there. But I'm hoping that at least with my daily content that I'm doing now, every day from 5 to 6, I will be streaming, and I'm going to be streaming from 5 to 6 every day, Sunday through Thursday. Friday, I'm going to be going at a random time, and Saturday, I'll be at a random time. But Monday through Friday, Sunday through Thursday, I'll be streaming every day at 5 o'clock to 6. And I think that consistency will help me out a lot here. And we'll wait to see how that all kind of, you know, how that works out. Especially since I'm trying to put out more content here. The new content, though, I think is the spearhead of this strategy. Mostly because it costs the most money and it takes the most effort. I have a script out now, or I got to read it today. Or tomorrow. I can't really, what's today? Today's Wednesday? Yeah. Probably tomorrow. It's a script about the new video I'm going to be putting out. I think I just had ChatGPT open up for you guys, and I got to open it up again. Right? Whoa. And this is basically talking about how the first video I'm going to do is about how government policies are destroying the middle class. So I think that'd be kind of cool. It's not going to be anti-Republican or anti-Democrat, but you will notice that both parties have kind of done a little bit to mess up and fuck up the middle class. So don't be mad if you guys are Republican or Democrat. I think if you're a die-hard Democrat or a die-hard Republican, you're probably not going to like the video because it kind of points out flaws on both sides. But it's going to be like a 10-minute long video. It's a very, very long script for myself to read, so it's going to take me about a couple hours to read that because, again, I don't do well at reading with my ADHD. However, I think it's important for me to give it a shot and see how I like it. Over time, I will try to go down the teleprompter route, but I think it's going to be a mix of me reading those scripts for now, making content for you guys, and then over time, I will make the type of content where I'm just like, I'm a YouTuber where I'm talking at my desk and stuff like that. I need to figure out the best way to do that, though. I'm literally thinking of having 2 different desks in my office space because right now I'm in the living room, my second living room. I have that extra guest bedroom that has like nothing in it. It's like that guest bedroom is literally Loki's room. Loki goes in there. He has his bed in there. He has a bunch of toys, and he has a bed that he sleeps on if he wants to relax. And he has a TV that I put on for like doggy TV shows. It's like literally, I have like a room in my house just for my freaking dog. So, you know, it's pretty crazy. But I think I'm going to put some office, one of my desks in there. And I don't know how I'm going to do it just yet, but I'm thinking of just moving the camera in between. So like when I'm streaming with you guys, I'll have the camera right here. I'll have all the settings for it good to go. And then when I'm doing my recordings, I'll do the recordings on Saturdays or Sundays. So I just move it there for the weekend. Then for the rest of the week, it's here. And I think that'll work out for us. We got 53 seconds or so. We're basically waiting for the Jerome Powell to go live here. We'll let you guys know when he does, though. Let me see. Jerome Powell.
Between now and then,
I'm looking at Bloomberg, and he's not there yet. So I'll let you guys know when he's there. See right here. Okay, that's good. Yeah, as long as somebody do it, I think it's fine. But right now, yeah, I'm just trying to keep those Dogecoin streams alive. They're not really profitable anymore. They will become profitable. Well, actually, the Dogecoin stream has never been profitable because I never had ads on it. The other one is not profitable, so they're not really making me money. But I typically just like a place for you guys to chill out and talk with each other. There's ups and downs to it. The downside is people don't go to Discord to talk, but I'd rather people just have a place to talk on YouTube, I guess. And there are other channels that do that, like, the Bitcoin Live channel. He has a good community over there that stays and watches all this stuff. So, he has a good thing there. Maybe I'll make another Bitcoin stream eventually, but I think I have 3 streams right now. No, I have 2. Why don't I have 3? I pay for 3. Oh, here Jerome Powell is. Hold on.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Wasn't really dovish or hawkish, so it wasn't really that dovish at all.
Gina Smilek from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
Ooh. So I would just say really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market, too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions. And that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
Quick update about Bitcoin.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our 3. We have 2 mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those 2 things equally under the law.
Low GDP causes a recession.
Far away from our inflation
Less jobs.
mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those 2 things are working together, and we're factoring those both into our policy.
Chris Rugaber, Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates. And I think this is how we balance them. It's a rough balance, but it does feel like, again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low. And we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying?
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Weighing the economy right now in terms of its ability to withstand multiple rate cuts, talk us through the process that you're thinking, or is it just one rate cut, or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen significant movement in the labor market, and we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this. We raised rates a year ago at the July meeting, and if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market, I think, unemployment was in the mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable
probably
rate.
meant services.
This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you've got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report and, frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably down to 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
Ooh.
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability. Right?
Not my fault.
And
Blame
so
Congress. That's what you just said. Blame Congress.
The constitutional document, the Statement on Longer Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just it, and then how is that affecting the outlook, and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in, and so much happening between now and the September meeting, and we'll make a judgment.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Oh, that's a good question.
We'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government, so we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late.
He's going back to his default settings every time.
We had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation. Rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria. Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market. And we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
This is pretty
Is there
dovish.
reason to think that the labor market might behave differently this time than it has historically?
I think history doesn't repeat itself; it rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be: is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown of the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers.
No
and
cut, Tyler.
People in the non-profit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter, so it's just hard to measure economic activity. There are a lot of. It's just difficult to do. So I look at both. But I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're
Congrats,
very
Tyler.
tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary. But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No.
Hey, Jerome.
We do not do that. We absolutely do not do that.
You should.
We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. We basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. We would just.
Oh, okay, I get what you're saying, but yeah, he phrased that the wrong way.
We're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Nicholas.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. No one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we've felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Jean. Hello, Jean Young with MNI Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this, and there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy, and so in the minutes we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly, the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question. That is the case. That, as I mentioned, we think that the time it's approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
Yeah, he's going to say yeah.
This is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market, so that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Greg.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And when you're saying you're going to be data driven, of course, it's always what the data, how they affect the outlook and the balance of risks. But nobody has great vision deep into the future. In terms of a reaction function, that's a long time discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Go to Jeff for the last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
All right. So that was a pretty good speech by Jerome Powell. It was pretty overall dovish. I think what you guys might have noticed more recently is that, excuse me, bit over there, turn that down. There we go. Bitcoin really didn't do too much moving here. You can see the 15-minute chart. We're pretty much sideways, maybe down a little bit more. But the stock market was doing just fine with that announcement. Russell, SPY, NASDAQ, generally all doing good. That kind of makes me believe that this was also good news here for Bitcoin. However, Bitcoin is not responding as forcefully here. So as we kind of see what happens next, reminding you guys that we are at a big level of resistance. The oscillators are right now still bearish. I am kind of concerned about what could possibly happen over the next few days. And because of that, I think this is still more of an opportunity for day traders and long-term investors. Swing traders, it is going to be more risky. Make sure you guys have your stop losses in there. And if you guys are going to be day trading, it is going to be much more of a scalper's market. It's going to be hard to justify holding this thing for 12 to 14 hours unless you guys are going to try to go with the daily chart flow, which at this point is kind of inconsistent because the weekly is bearish. The daily is bullish, turning bearish. The 4-hour right now is bearish. 2-hour is bullish. The 1-hour is bullish. 30-minute is bearish. And you can see how all that means we're going sideways here, which makes it a little bit more difficult because these small moves that you see from day to day, they're like 0.5% to 1%. And the only way you guys can make money doing that is going to be with leverage. And, using leverage already is going to be something more of a risky thing to do, right? So, overall, a great meeting. Bitcoin is not responding as bullishly as the NASDAQ, the SPY, and other assets. But I do think for the long term here, this is still going to be great news for Bitcoin. And we're just waiting for the technicals to allow us to have a juicy breakout with the momentum behind us to push us up towards, 80,000, 90,000, then eventually that $100,000 milestone. And then, of course, maybe if we're lucky, we'll go up to 120,000, 150,000 and stuff like that. So I'll see you guys a little bit later on here tonight. I am going to record a script here, I think tomorrow for you guys. So get ready for next week, me putting out some high quality content here. I am very excited about that myself. Loki will say goodbye to you guys as well. I don't know if he'll actually let me. Loki. Oh. Loki. Where's Loki at? Loki. Loki. Oh. Okay. Yeah. You good? You good? All right. Yeah. A little bit forceful, but yeah.